So, yesterday we saw the Bucs win the Super Bowl. Congratulations to them. And Tom Brady earned an amazing 7th championship ring. Now, I know a lot of people hate the guy for whatever reason, but even if you do, you still have to admit what a fantastic achievement that is, especially at his age of 43. What a guy. But you know, the Super Bowl isn't just a day for the NFL champions. There are also many companies that come out on top as well. And amongst them, producers of chicken wings are big winners. The chickens themselves, not quite so much. According to the National Chicken Council in their latest chicken wing report, and yes, those are genuinely real things, they forecasted that Americans would eat 1.42 billion wings on Super Bowl day alone, making it the most popular day for wings. And in fact, that's a 2% increase from last year, which had already set the record. So for reference, just to put this all in perspective, 1.42 billion wings would be enough wings to circle the world. Not once though, not twice, 3 times. So yeah, that is a lot of wings, more than I could get through. The United States Department of Agriculture also points out that there's hot demand for wings, as cold storage inventories declined late last year as retailers and restaurants stocked up to prepare for it. As a result of this, wing prices have increased by 20% this year alone and are selling 50% above last year's Super Bowl price. Now, an increase before a Super Bowl isn't a unique event, as prices often increase near to popular sporting events. But actually, early last year, around April sort of time, wing prices actually fell because the NCAA basketball tournament was cancelled due to the pandemic, which resulted in a surplus of wings and caused the price to fall to the lowest level in 9 years. However, although the pandemic shocked the wing market early last year, it also redeemed itself by helping it to recover, as demand for wings increased throughout the rest of the year. As restaurants are being forced to close and lay off workers, eating in became the new eating out, and takeaways became the main choice. For some companies like Domino's and things like that, they didn't really need to change their business model since they were already serving products that were suitable for delivery. But keep in mind that for delivery to really work, the food can't become soggy in transit, which makes wings kind of perfect because they retain their form and consistency. So if we look at wing companies like Wingstop, for example, they opened 140 new restaurants last year at the same time that other restaurants were being forced to close their doors. So from the trough, Wingstop's stock price increased by over 250% to its peak. Although I have to say their restaurant in London isn't too great. They've got nothing on Orange Buffalo or Thunderbird. Just saying. As for other restaurants that don't normally sell as many wings, at least not as many as a Wingstop, they needed to adapt their menus so they were able to deliver. So during 2020, restaurant servings of wings were up 7%. And this is just a little bit lower than supermarkets, which saw a massive increase in sales of wings of over 10%. As a result, the price of wings had been on the rise. But this is not all about the demand side, it's also the supply side as well. You see, the pandemic has obviously caused staff shortages and increased costs for producers. The price of chicken feed, things like corn and soy, have skyrocketed, as we covered in a couple of recent videos. If the price gets too high for consumers, then substitutes such as chicken breasts or pork ribs may become more popular. But it seems that chicken will still remain the protein of choice this year. The USDA estimates that chicken consumption will increase 0.5% in 2021, while beef will decline. And of course, today there's a lot of chat about goat going around. Unbelievable. Thanks for watching.